Okay, so let's continue with the left to right and zoom out rule. So this is the rule we will discuss in this lesson. And let's start from left to right and what we do in general. So when we have any kind of market, any kind of chart in front of us, first thing we want to do is zoom out a bit, okay? And we want to understand what current range, what current price expansion we are in. Is it a bullish push? Is it a bullish impulse or is it a bearish impulse? And for that, we want to start marking up the structure based on the pullback rule and break of structure rule, some distance away from a current position. So if this is a current position, we want to start maybe like zoom out a bit and start from the left side of the chart. And with experience, you will know exactly where you need to start, but usually like just zooming out a bit and starting from here. And what we need to do is to see where we had this impulse and where we started to have a break of structure. So on this chart, what we have? We have this up move. So let's check. Yeah, so we can start from even further away. And let's consider this as our high, okay, and this as our low of our bullish push, okay. So what we want to see right now, right here, is that we had some kind of bullish push this part of price action. Now we need to understand that when the market moves in any kind of trend or just moves, it creates price expansions or pushes or impulses. These impulses, they create ranges, what we call ranges, that are limited by lows and by highs. And then market usually will not do a move like this, like a perfect book move, you know. Instead, it will do some kind of consolidation inside of the push itself. So on a chart, it looks like this, push. So on a chart, it looks like this, a push, you see, which created some kind of price levels. And now price develops inside this area. So it created an area, impulse area, a range like we call it, and then it starts a consolidation which can have a lot of forms. And so it forms inside structure. Why it's inside structure? Because it's inside this push. Or another name for this is fake structure. So this can be called a fake structure. Why? Because even it seems like some points are breaking inside, we do not consider it as a true break of structure. And so this impulse could be called a structural range or true range or structural move. But the main point is that it has some kind of a push, an impulse that breaks the structure, that really breaks the structure, and then starts some kind of price action inside. And how we know the break of structure was real? We will know it when we use left to right rule. Then we will not be stuck in this inside structure. So this is what we want to follow. Let's do it on this chart. Let me delete these brushes. So as you can see, we had this down push. So we had this down push, and then market started to perform some kind of price action inside. And as you see, at this point, this candle closed above the high of the previous range, and now it created a new structural high, this one, and it came from here. So this part we will also discuss a bit later, but for now just observe and try to see what I mean here, and then in the next session we will see exactly how to mark up the structure. So we had this down push, and then inside structure, and this up push broke previous structural level. Now we have this bullish push and inside structure, which eventually got broke by this push. So the structural legs, they look like this: down, up, and up, down, up, and up. Then we had this low and we had this high. This low got broken by this candle, as you can see, and now we have a down push with a break of structure. And the market started a pullback with this price action, and exactly the pullback signalizes this was signalized by this candle. So yeah, it's a bit hard at this point because it's not clear, but as you can see that this was the first candle that closed above the previous one, this one. So we actually know that there was a pullback. Now this was a low, and so what we have here, we have a down push and then consolidation inside of this down push. And now I will do a quick markup with just a brush. So we had a down push created by this, then up push created by this, and you see a lot. So this was an up move, and now we have a lot of inside structure. Why it's all inside structure? Because the price never left the boundaries of this up impulse. You see, it created a pullback here and just started the consolidation, and that's all. So the first candle that actually broke this push was exactly this candle, exactly this one. So this was the break of structure, and this break of structure came from this high. So we have an up push, and now we have a down push, down impulse, bearish range. We had this low, and now we have a new push which started from this high and went all the way down to here to eventually become broken by this candle. So we have a down push and then some inside structure, and again a down push, and eventually we had some inside structure and bullish push to the upside, of course, with lots of inside structure. And notice how when market is here now, we don't consider it as a bearish break because we know that we are inside the bullish price action. And here is the place where I want to remind again that this first part, this first series of videos is an intro, and you are not supposed to grasp on everything right away and have a crystal clear understanding. These concepts will be discussed again and again, and sometimes you will need to go back to the previous videos and maybe do again the tasks. But now just bear with me, and I promise, step by step you will get a better understanding of what's happening. So this is how we arrived to a place where we are now in the market. Yeah, we started like this, we zoomed out, and we started to go from left to right, tracing the price like it was developing. So So what we know now is that we are inside this big bullish push of a price that broke this level. And now let's trace. So we were tracing the price that was in front of us. Now let's trace the price in backtesting mode, yeah, in real time. So what we want to see is any kind of break of structure. And remember, break of structure is a body close above a low level or high level. And as you see, this is not a break of structure, this is just a wick, and we want to see a break of structure. So the market just continued to be inside this big price expansion and still there. And this candle is the first that broke this previous range. And now when we have an impulse, remember the video about impulses and pullbacks. We want to have to separate impulse and to have the end of the impulse. So we have now a break of structure with this candle, and now let's follow the move. And we want to have a candle that closes with its body above the previous candle to finish our bearish push. Right now it was not happening. So this candle is the first candle that gives us a technical right to separate this range. So lowest point before this candle happened will be our low, and we mark it up. And now we want to ask ourselves, where is the start of an impulse? Again, remember this video, we already discussed it. We have these candles that closed above the previous one, and we want same price action in the beginning of the impulse. So where it happened the last time before this break of structure? Yes, we see it here, but actually we have same price action even closer to the break itself. And this is it, this is the root of the move. So that's why the high of this bearish push is this one. And that's why the impulse is not from here to here, but from here to here, based on strategy rules. Okay, that's it for this video. This was like an intro to so intro part 2 to the rule of zoom out and go from left to right. And in the next video we'll discuss more about the same concept. You don't have homework for this video and for previous one. Just follow the videos. Okay, see you.